Hi, this is Alessio. Hope you're well. In this video, we're going to take a look at the chart of the stock markets, and especially these two charts you're seeing here. I'm going to explain to you what the significance of these charts are for the major markets and what is most likely to happen to the stock markets in the next several weeks and months. Are the markets still bullish or are they not? All right, guys, join me. Alright guys, welcome back. So as you can probably guess, I'm not in London. As I explained in my previous video, I'm in Venice, Venezia. Buongiorno amici. Hopefully you can hear me as I'm gonna walk in the streets here in Venice and just take a look at the stock markets for you guys. Yesterday I went to the center of Venice, a really amazing and beautiful city here. You know, as I said before, coming to Venice is often like coming to a different century. Alright guys, so in my previous video update that I made about the stock markets, I explained that as long as the stock market remains above the key level of support, which is the September lows at 5,400, I'm going to maintain a cautiously bullish view, an optimistic and positive view about the stock markets. Now in this video, I want to draw your attention to two other charts, which I think are really important for the markets. The first chart I want to show you is the chart of a market breadth indicator, and it's called the McClellan Summation Index. The McClellan Summation Index is a very important tool when you're examining the trends and momentum of the markets. Now, one important thing you can probably see in this chart of the McClellan Summation Index, I'm sorry guys, it's a bit of a mouthful actually trying to pronounce this word. So as you can see here on this chart, you can see a clear trend, a series of higher highs and higher lows on this chart of the McClellan Summation Index. And you can clearly see that there's an uptrend. And that is very important because as long as the McClellan Summation Index remains in a clear uptrend on this chart, that is still showing the momentum. The momentum in the stock markets remains bullish, again, remains positive, at least for the next several months. Now, another important chart I want to draw your attention to, which is showing a very similar picture, is the advanced decline line. Now, this is a very important chart, another market breadth indicator. And the advanced decline line, I would say, is one of the most important leading indicators for the stock markets. Okay, so notice, for example, the advanced decline line also is showing that we're in a clear uptrend. Again, series of higher highs and higher lows. So I would argue, keep your eye on this chart because usually the market does not top. The markets do not top until there's a clear divergence. So in other words, historically, the markets, the stock markets, do not usually top until we see some kind of a negative divergence on the advanced decline line. We've seen this in previous times in history, for example, near tops in the dot-com crash, near the top of the dot-com bubble. Typically, there's some kind of a negative divergence before we see then a major reversal in a top. Now, of course, it might be different this time round, but personally, I'm going to remain positive and optimistic on the stock markets as long as the advanced decline line also remains an uptrend. Again, we see a series of higher highs and higher lows, showing a clear upward trending environment for the stock markets. So I would argue, guys, that these two charts, again, the advanced decline line and the McClellan Summation Index, are two very powerful, important leading indicators for the stock markets that indicate that, again, as long as the trend continues to the upside, we may potentially see significantly higher levels in the stock markets. Potentially, we may reach 5,900 to 6,000 on the S&P in the next several months by the end of this year. Now, again, that's as long as the S&P stays above the September lows at 5,400, because if the stock markets were to drop below those levels, which I don't expect, I think it's a low probability, so I think it's a much lower probability. I'm only mentioning that from the point of view of risk, but I think if the markets, if the S&P were to drop below the September lows, I would have to change my mind because that would invalidate the analysis that I'm putting out here. That would be breaking of support. But again, that bear scenario is a much lower probability, so I'm not expecting that. So as far as the stock markets are concerned, as the Italians say, non ti preoccupare, don't worry. It looks like the trend to the upside may continue. Now again, we have to remember, we are in the month of October, a rather volatile month. So there may still potentially be some glitches or pullbacks in the stock markets in the next several weeks, for example. So I'm not saying there won't be any pullbacks or glitches, but I'm saying the general trend, I think, is much more likely to continue to the upside, especially as we're entering what's called the Halloween effect as well. All right, guys, so that's really what I have here for you on the stock markets. I hope this video has helped. So from here in Venezia, in Venice, I want to wish you a fantastic week. Thank you very much indeed, guys. Grazie mille, amici. I'll see you in the next video. Cheers, guys. Bye now.